Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined down the line by Ryan Littlestone Trader and Analyst at forexflow.live. Thank you for joining us today, Ryan. Are you well?
Yeah, very well, thank you, Matt. So I hope you are too.
Yeah, very well, thank you very much. Let's pick up on last week. We were speaking ahead of the Bank of England rate decision. We were talking potentially about going short of cable into the Bank of England decision, and obviously we had the rate hike. How did that work out? Did you have a trade on into it?
Well, you know, one of those things, I've been pumping shorts all week long. You know, as I remember saying, I couldn't see a reason why the pound would go up at all. And we've been rising on the expectation, so it was a typical buy the rumour, sell the fact. We got up close to 133, and you know what? I chickened out right at the last minute. I'd really been 50-50 on whether they would hike or not. And I, for some reason, as traders do, I got cold feet, and right at the last minute, the pound was falling, and I thought, right, I probably missed the opportunity to get in higher up, so I left it alone. And as we saw, it dumped off quite massively, and would have been a good trade.
Understood. Well, you can't get all the trades, that's for sure. But now, with the cable around these levels, where do you see this going? Are we going lower potentially? Could 130 be the next stop, or are we going to see a kind of a retrenchment back up to the highs?
Well, I think we're going to tread water. You know, we switched from one thing to another. You know, in the week running up to the BOE, it was all about that. What the Bank of England would do. They were obviously not as hawkish or as the market wanted going forward. And you know, as soon as that event finishes and we had the main reaction, we instantly switched back to trading on the dollar. And now with this week, we're going back into Brexit because we've got the start of the next round of the negotiations at the end of the week. So pretty much we're going to be treading water, I think, until we get something out of these negotiations. How well they're going to progress, and that will set the tone of the direction. Unfortunately, we're just open to the headlines, so there's no way of really planning for good or bad outcome. We've just got to take the headlines as they come out and roll with the punches. But you know, we've recovered quite a bit of the loss from last week, which suggests that you know the market is taking a better view of Brexit. The big worries aren't there anymore. But again, you know, one headline later on this week or early next week, and you know, we can sink at 100 pips or we could rise 200 pips. So you know, while we're in this type of consolidation phase, this treading water phase, you've just got to roll with the punches, really.
Understood. And looking at dollar yen as another currency pair, we've spoken about this before on the show about kind of being in a range, but we're seeing the yield curve flatten just slightly on the dollar. What's your take now on dollar yen? Is there any breakout? Are we going to finally see a breakout from these ranges before the year end?
Well, again, you know, as you say, we're talking about the ranges. You know, we've been looking at the highs up at the 114, 30, 50, that big double top from earlier in the year. And we tested it and broke it last week up to 114.75, but it failed, you know, and we're back down again. And now those highs again are forming resistance. So it's very difficult because one minute you look at a trade and you look at a penny, you think, right, we've made a break, we've broken above these highs. Next stop should be 115, but once again it fails. And you're right, bonds are a big driver behind that. We're seeing, you know, US 10-year yields are my indicator, my proxy for how the dollar's faring, and you know that's sinking again. We had a little touch at 2.4%, and now we're down in the low 230s. So, you know, it's very difficult. Just when you think you're going to get a break, it fails. But how you trade that is, you know, if you'd have gone with a break above, let's say 114.50. You need to wait for that confirmation. And we didn't get that confirmation. It came all the way back through. So if you went along on the break, you'd keep a stop very tight under 114.50, because if the break doesn't hold, then it's going to come back down again. And here we are back at 113.60. So, you know, what happens is in those situations where you get a failed break, is those old resistance levels, they build up again, and all the hard work's got to be done again. So it's very difficult. If you take shorts against those levels, you're in the money. If you were long on the break, you maybe lost a bit of money. But you've got to look at how you trade these break levels, and you always look for that confirmation.
Fantastic, very key for our viewers there. And finally, let's have a look. We've got a chart for this one, the dollar CAD on the 4-hourly chart. Just talk us through what we're looking at here and where potential trades could be.
Yeah, the CAD's a great currency at the moment. It's almost trading like an emerging market currency. It's very volatile over the data. Compare it to the euro. We had retail sales out, all sorts of figures out yesterday, PMIs. And barely moved 5 pips on pretty good data. You get a minor data point in Canada, and this thing moves 100 pips because such is the anticipation on what the Bank of Canada are going to do. So it's very hard at the moment to with all the robots and algos to trade data points, but this is one pair that's good for that, and at the moment we're seeing it flip around. I'm quite liking down towards the low 127 level. I bought it yesterday, as readers will know on my site. I bought it last week, just after the non-farm payrolls, because we've got a good Canadian jobs report as well, which also added to the negativity around the jobs report. So that dip I bought down to 127.50. I bought it all the way down to 127.11 because I thought that, this one report is not going to change the Bank of Canada's thinking. They're back into neutral. The rest of the data isn't looking too hot at the moment. And I bought it on the fact that we're going to get a spring back, and off we did. We got a run up to 128 yesterday and over. But again, we've had another failure. And so the levels are pretty well defined. Up at that 128, 128.30. We've got resistance forming. And we've had a couple of tests towards 127, and they're holding as well. So while you've got these ranges developing, you can trade in between them, sell at those highs, buy at those lows, keep the stock tight, and just wait for something to happen. But I think that the bias at the moment is to go long dollar CAD against some of this negative data coming out from Canada, because it's gonna cause 50, 100 pip jumps if the data misses, because the market's going to be pricing out extra hype from the Bank of Canada.
Understood. And I believe we've got a few data points actually today out of Canada. I think we've got housing starts later on. So will you be looking at those data points and thinking about trading either ahead or over those numbers?
Yeah, I'm waiting to see if we get another test of the low 127s, and that's where I'll look to get in. Canadian housing starts isn't that big a data point. If we get the monthly GDP and the inflation numbers, they're the ones to jump on. We had the Ivy PMI earlier this week, and that wasn't overly great in terms of moves, but we still saw a 30, 40 pip flip-flop around it. Housing starts probably won't be as volatile unless they really miss or really beat. But look at the Canadian data, and it's a good one to trade on.
Understood. Well, on that note, certainly we'll look at that currency pair going forward. Ryan, thank you very much for joining us down the line today.
Thank you.